Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is October 31st, 2022. Happy Halloween to those of you that celebrate. And a lot of people are going to overreact and misread to this correction, okay? The next big move to the upside is going to surprise most people, okay? We're going to get back into what is likely going on with Bitcoin's price action, as well as the rest of the cryptocurrency market's price action. What's going on with the DXY? We're going to have also a look at Bitcoin dominance, the S&P 500, all that great stuff. So if that interests you, then stay tuned. Hope you're having a great day. It is a bit cloudy, overcast in the DC metro area, but it's a great day nonetheless. Let's get into it. All right, let's start off with the DXY. Okay, DXY is the market mover. Yeah, it is basically what we want to focus on to understand what's likely going on with the market. Okay, and we looked at the DXY yesterday in the Sunday live stream, right at the open of the DXY on Sunday evening at 6 p.m. Eastern Standard Time. And what we saw was this trend right here, okay? This trend right here that just came right above our 14-year resistance, okay? And that's fine. We've been playing around this 14-year resistance, going up and down around it, okay? This is not what some people may allege, a complete domination, a retest, right? Breakout retest of this 14-year resistance, right? Like what some people allege is that this was the breakout and this was the retest, and now you're going to continue this trend for this 14-year resistance. Like nothing in our momentum indicators are alleging or are indicating that, right? On the 4-hourly time frame, we're completely overbought, okay? On the let's see, the daily time frame, we're not yet completely overbought. Let's see, the weekly, okay, weekly cross bearish, monthly completely overbought, okay? If that were the case, there's no way that the very high time frame monthly stochastic RSI would be so overbought, okay? So just going back to the small time frames, let's go back to the hourly. You can see exactly what's going on here. We had what we think is an A wave, initial break of structure, a B wave, which is a counter trend, okay? And now we're experiencing what seems to be an impulse, okay? Let's see. I'm looking and thinking. I'm looking and thinking. Trying to make sense of this price action, you know? Let's see. So, first off, I'm reading this right here. And this, to me, is a bit tricky. I'm not comfortable saying that this is a 5-wave move, okay? It does seem impulsive, okay? And this obviously breaks whatever that impulse was, right? As an intra-wave correction, at the very least. But going into this price action on the DXY, for me, I'm not super comfortable just saying, oh yeah, this clean 5-wave move. Like, I don't see that. Let's hide this for a second, just so we can work here. And we're going to try and figure this out. Also, guys, let me know what you think. If you have any opinions, any alternative reads, right? I'm just going to do my best, use my skills, and try and read this as best as I can. So let's just clean up our workspace up here. So this is on the hourly time frame. Let's jump down. Let's really look at this carefully. Jump down into the 15-minute time frame. And so, guys, I'm doing the work with you. This isn't a stream where I just present things that I've already prepared. This is a stream. This live stream serves as a sharing, a true sharing of my daily sessions, right? This is what I do for a living. I go into the markets and I read. And then based off of those reads, as well as some good risk management, I trade. Okay, so I want to say as messy as this is an impulsive move, okay? This is a 5-wave move down. And I think what you get here is a 3-wave move up. Now let's measure this to see if it fulfills the minimum requirement of a wave 2 retracement. So let's pull our Fibonacci retracement tool. Let's turn off our magnet so we can pull these. And do you see that right there? Right there. That is basically price saying, all right, I know that the minimum retracement for a wave 2 correction is the 382. Let me just tag the 382 and keep it moving. That tag of the 382 as a minimum retracement means that this impulse, this trend is particularly strong. Okay, if it was going up, I would say it's particularly bullish. That tag of the 382 and then continuation of this general downtrend means that this general trend is particularly bearish. Okay, that's the first thing that I notice. All right, so I'm comfortable saying that this is a wave 1 wave 2 situation right here. Wave 1 wave 2 situation. Okay, so given that, let's now pull our Fibonacci extension tool from the top of this. All right, let's turn the magnet back on. From the top of this impulse, wave 1, bottom of wave 1, retracement of wave 2. Okay, and what do we know? What do we know about wave 3? Wave 3 typically ends between the 1618 and the 2 Fibonacci extension. A minimum extension of wave 3 is the 1 Fibonacci extension. Okay, so here we have price coming down to between the 1 and the 1236. Okay, so we've met the minimum extension of wave 3. But it's like wave 3 here is kind of putting in a minimum, okay? And then we put in a quite significant wave 4. This is my read so far. I'm looking at this as a leading diagonal. Okay, and I spoke to this yesterday. Yesterday I was saying how I'm seeing leading diagonals in the crypto market, okay, to the upside. And given that the DXY is inversely correlated to risk on assets, this makes sense. It's consistent with our reads in the crypto market, except it's completely flipped on its head, right? Because it's inversely correlated. So my best read on the DXY is that it's in a leading diagonal on its way down. This is impulsive price action right here. Okay, and so let's put this in. All right, is this 100% correct? I don't know. Nothing's 100%, but this is likely based off of my understanding, based off of, you know, everything that I'm reading. This is a very likely read. We're going to see what our volume indicator and our momentum indicators say about this. So in this wave 3, I see 5 3 5 3 5. I really like that. Okay, let's see. Yeah, I like it right there. Actually, let's see. 5 3 5 3 5. I like it down here. So wave 3 is the longest of the Elliott waves, right? That's what you're getting here. Wave 4 is complex, okay? Definitely a complex correction. And this will actually, okay, so we're going to talk about this. I like this. It's messy, and a lot of times real life counts are not like, you know, regular cookie cut. Obviously, you get the 53535 extension more often than not. Just probabilistically, this is what you typically get, right? Both up and down. Okay? But in real life, in really, you know, true economic conditions, you're not always getting that. And sometimes you get concerted wave 3s or expanded wave 3s or extended wave 3s. And leading diagonals and ending diagonals. You get all kinds of things. And you have to be able to read that. So I like this, right? It's not impossible to read. It's a little challenging, but it's very, very, it's realistic, okay? So that's wave 1, that's wave 2. Wave 2 is legal. Okay, wave 3 is exactly what you think it should be. It's legal. It's retraced, or it's extended to a minimum of the 1 Fibonacci extension. And now, wave 4 is kind of going crazy. Now, typically in a regular 53535 advance, wave 4 does not encroach in the region of wave 2, okay? So wave 4 will stop short of coming into this region. So we'll actually say, as one of the rules, quote unquote, right? Some people who just, you know, are beginners in Elliott wave will say one of the main rules of Elliott wave theory is that wave 4 cannot come into the region of wave 2. Okay, that's an inviolable law, or that makes it an illegal count. That's not necessarily true. That's in a regular run-of-the-mill 53535 advance. This is true. But in the case of a leading diagonal, you can throw that out, because wave 4 can very well come into the region of wave 2, and does, right, in leading diagonals all the time. You see leading diagonals like that all the time, right? So here, we're just about coming into the region of wave 2. If not, we're right at the base of the wave 2 correction, okay? But I'm seeing this happen, and wave 4 is complex. Wave 2 is relatively simple, okay? Law of alternation. Wave 4 is sharp. Wave 2 is relatively flat. Law of alternation. I really like this count. It satisfies not the law, but the guideline of alternation, okay? Where, like I just said, you see flat in one, sharp in the other. You see shallow in one, you see relatively simple in one and complex in the other. So I like this count. Everything, you know, it's following the guidelines. Now let's focus on the complexity of the wave 4 correction that we're currently in, okay? And interestingly enough, I think a lot of the crypto market is in wave 4 to the upside. Again, I like this count It makes sense. It's poetic. It rhymes. It's corroborated by what we're seeing in the crypto markets. Guys, if you're getting value, please like, share, and subscribe. I don't see anybody else talking about this stuff in this manner. And this makes sense to me. I don't know if it makes sense to you, but it makes sense to me, and I've been trading it for quite a bit of time and successfully, right? So, okay. What to make of this correction? So we're on the small time frame, so we're seeing a bunch of detail, which we love. This to me seems like a zigzag, okay? A zigzag. What's a zigzag? A zigzag is a 5-3-5 extension, okay? So 5 waves up, 3 waves down, 5 waves up. I see 5 waves up, 1, 2, 3, 4, 5 very clearly. And I see 3 waves down, ABC. Then I see 1, 2, 3, 4, 5. That's my zigzag. 5 waves, 3 waves, 5 waves. Okay? And this is what you typically get in a wave 2 correction. But again, wave 2 was flat, so I think we got it in wave 4. This would be technically a W X Y. Okay, and I think I'm reading the 3 waves down correctly. Let's see. Yeah, I like that. You got this triangle in wave 4, which you can only get in wave 4, right? Because you can't get triangles in wave 2, but you got this A, B, C, D, E triangle in wave 4, right? And then you have your 1, 2, 3, 4, 5 ending diagonal in wave 5. I love this count. I don't like it, I love it. Okay? So you got our complex correction, our sharp zigzag, alright, our complex WXY zigzag in wave 4, and wave 4 is pretty much done. Okay? Now, let's turn on our volume indicators and let's turn on our momentum indicator and see what they have to say about this. Oh crap, I don't have volume on this. So yeah, let's just turn on the momentum indicator. Okay, so the momentum indicator, let's go on at H4. So the momentum indicator is saying this trend is done. Okay, so momentum indicators got us here, starting out on the top and dumping down all the way down here, okay, and then retracing all the way up. So momentum indicators saying that this is a valid count. This looks legitimate, okay? Again, starting from the top, completely overbought, all the way down to oversold. Took you all the way down to the end of wave 3, you know, completing your oversold momentum and taking that oversold momentum and turning it back into overbought momentum to the edge of wave 4. Okay? And now we're preparing for a pivot into wave 5. What's that look like? Okay? What's that look like? Again, leading diagonals. Wave 5 wave 5 is going to likely be extended. Okay, why? 1, because wave 3 is truncated. Wave 3 is truncated. It didn't hit the minimum 1618 Fibonacci extension of wave 1, retracement of wave 2. And 2, because wave 4 is longer or larger than usual. So that typically gives you an extended wave 5. Now, what does that extension look like? So the theory states, and let's go back on small time frame so I can pull this extension properly, because I have to see the orthodox low of wave 3. And let's get rid of our momentum indicator. We already saw what that says. Okay, yeah, I think that right where I put the Elliott wave line is where the end of wave 3 is. So here, 1 through 3 retracement of wave 4. Okay, and I said this yesterday. and this isn't something I'm making up. You can look this up in Prechter and Frost's. You can look this up in Steve Sinclair's book, Elliott Waves Made Simple. You can look this up throughout the market. I think Steve Sinclair doesn't talk about this because this is a little more advanced, but Prechter and Frost definitely discuss this. When you have a leading diagonal, when you have a truncated wave 3, an extended wave 4, or a larger than usual wave 4, wave 5 is typically extended or expanded, and the minimum extension of wave 5 is the 1:618 or phi ratio of waves 1 through 3 retracement of wave 4. Okay, so that's the pattern that's been seen throughout, just trading, people trading. So this is what it should look like at the minimum. Can it go higher? Absolutely. Okay, so that is the Elliott wave analysis of the DXY, guys. Let's look and see what this means in terms of pattern analysis. Okay, again, whenever you make good analysis, it doesn't matter if you're using Elliott wave or GAN or whatever. They should speak to one another. You should have confluence. If it's good analysis, you should have confluence. I'm trying to figure out what I want to do here. Okay, let's go on the 4-hourly time frame. And guys, you see, we're figuring this out together. This is exactly the process I undergo when I do work. I'm trying to figure out what the market's doing, what it's saying. I'm not just, kind of pulling shit out of my ass and saying, oh, we're going to pump, we're going to dump. I'm doing this analysis, right? I'm not looking at the news. I'm not looking at the Fed and, how many basis points or whatever. It's just, I'm doing technical analysis. This is technical analysis. And I have a thesis, DXY is the market mover, so I analyze the DXY. Now, let me just say before we go into projecting wave 5, wave 4 may still have some room to the upside. We're going to peek at that in a second, but nevertheless, it's close to being finished, okay? And that is what our momentum indicator on the 4-hourly time frame is saying, as well as the hourly indicator or hourly time frame momentum indicator. Okay, what I'm doing right now is I'm looking for what this pattern breakdown would look like, okay? And here, okay, let me not overthink this too much because I think I'm doing that, and I don't want to do that. My initial inclination was to look at this as a head and shoulders pattern, okay? And you see the head and shoulders pattern that I just drew out. Let's make that more clear. Here it is. Okay, something like this. This is all just a massive puzzle. And it just takes a little patience and a little skill to figure it out. But it's just all one big puzzle. Okay? So this is the head and shoulders that I'm seeing. Okay, I'm seeing the left shoulder, head, and the right shoulder. And we all know those are bearish constructions for the most part. And they're confirmed with a breakdown of the price below the neckline or above the neckline, okay? Or in the case of head and shoulders, below the neckline, okay? And the target of the head and shoulders is the highest, right? The head, you can usually take the head, right? Or in this case, the left shoulder, which would be the highest peak, to the neckline. I think the neckline is here-ish somewhere. Okay. Look at that. You can't make that up. Guys, look at that. You can't make that up. Look at that. Do you see what I just did there? I did Elliott wave theory. I did Elliott wave analysis. I measured the Elliott wave of our leading diagonal, or what looks like a leading diagonal. Okay. And then I did pattern analysis, which I like to do to confirm or corroborate, not confirm, but corroborate my reads. I like pattern analysis. It's simple, and it's just using support and resistance. And I think whatever you do, whatever methods of technical analysis you gravitate towards, it's important to have a firm grasp of basic support and resistance. There's no whatever it is that you do, if you don't know basic support and resistance, I don't know if you can make it in technical analysis. Okay, that's just the basics. And then obviously Elliott wave, Gann analysis, other things can fine-tune, can refine your analysis, right? Because basic support and resistance isn't, kind of always giving you all the detail that you need to make projections and to make your pinpoint, laser, sharp entries. Anyway, did you see what I just did there? I measured this bearish trend, and the technical breakdown of this bearish trend happens to be the same target of the wave 5. And how did I calculate the wave 5? I took waves 1 through 3, retracement of wave 4, and projected the phi ratio, or 1618 Fibonacci extension. That's what I love. When that happens, I'm ever more confident in my read, because I attained a similar conclusion with two completely different manners of analysis. Okay, so I really like that read, for the reasons I just stated, and I think this target down here for the DXY is 104.71, and finally we break down from this pattern. Okay, I say finally because it's been so long that we've been hanging out above here, putting these reversal patterns in, right, forming this head and shoulders essentially, and then finally when that breaks down, the real bearish momentum of the DXY begins, and the real bullish momentum in crypto and stocks and risk on assets begin. Okay, so that's a great segue. Remember, this is inversely correlated to stocks and crypto. So if we're seeing this being bearish, if we're seeing that this is likely to break down from a major support, then crypto and stocks should be diametrically opposed. Okay, so we have a few comments. Amazing Videos of the World says, hey, can you make dent coin analysis from 2017 to 2022, complete chart analysis and new price possibilities? Amazing Videos of the World, that sounds like a commissioned job, like that some venture capitalist fund would give me. I can look at the chart, but I'm not gonna do a whole report and stuff like that. That's real work. That takes a long time. But yeah, I'll have a look at it, cursory look at it. But yeah, Amazing Videos of the World says, I love your analysis. Thank you very much. Let's see. Love from Pakistan. Love back from DC. And so yeah, we'll look at dent coin for Amazing Videos of the World. All right, let's add it. Let's see what's been going on here. Okay, so let's find a chart with the most history. That's always a trick, yeah. They should, I think that's TradingView. If anybody from TradingView is listening, I think the next update, one of the best updates that you can do is provide charts with the most history, because that's usually what I'm looking for if I'm doing high time frame analysis. I want the chart with the most history, and that's not evident. It's not apparent here. Let's just pick up the Binance chart and then see if that's any good, and if it's not, we'll look again. Okay. Okay. Whoops. All right, let's have a quick look at Bitcoin dominance. Remember, Bitcoin dominance, kind of like the DXY, is inversely correlated to Bitcoin going up and the rest of the crypto market going up. We love the fact that Bitcoin dominance broke down from this rising wedge, okay, and is continuing to break down. Basically has put in an intra-wave correction right here, right as it reached the target of this breakdown of this rising wedge, and basically we're waiting for continuation of this downtrend. So that's Bitcoin dominance. Not too much to say about that. Higher time frames, 4-hourly time frame, you see that the momentum indicators cross bearish, and it's still got a lot of ways to go to the downside. Okay, daily time frame looks like it's oversold. Weekly time frame completely overbought. Monthly time frame overbought. So all I'm saying is higher time frames, it's quite clear what's going on. Bitcoin dominance is likely going down, and that again is a great sign for crypto going up. Okay, let's go into the SPX before we jump into our regular crypto reads. So the SPX on the hourly time frame, you can see we're still in this impulse. Looks like it's a wave 1, wave 2 situation, and then this is wave 1, wave 2, wave 3, wave 4, wave 5 perhaps, or maybe wave 5 is not finished. Let's measure it out real quick. In any case, we're in an impulse. You know, there's nothing corrective about this. Let's take wave 1, retracement of wave 2. I think wave 5 of this intermediate wave, okay? Let's see. This looks like wave 1, wave 2, wave 3, wave 4. Again, a triangle, and wave 4. You don't get triangles. This is a nice, useful, practical Elliott wave rule. And this is a rule because I've never seen it. And every time you see a triangle, you know you're either in a B wave or wave 4 or an X wave, right? You're never seeing triangles in wave 2. And so that's like, there's a lot of little things that you can do if you know your theory to help make your reads, to help count waves accurately. If anybody's ever counting an Elliott wave with a triangle in wave 4 or in wave 2, then it's likely, highly likely, that that count is incorrect, okay? So again, you see wave 1, wave 2, wave 3, wave 4, nice little triangle, and wave 5. Okay, I think that wave 5 comes a little bit higher here. And that is essentially where you're going with the SPX, okay? So, see, that is your wave 3 right here. So that's a regular wave 3 between the 1618 and the 2 Fibonacci extension. So, that's what I see with wave 3. Obviously, wave 3 can be extended. It can go way beyond the 2 Fibonacci extension. So who knows? But you're in impulse. So what you're getting here is likely going to be some sort... I wouldn't be surprised if wave 3 was extended, and I'll tell you why. Because on the pattern analysis front, you formed this inverse W pattern. Or, yeah, it's not an inverse W pattern, it's a regular W pattern, okay? You can say that the W pattern was this right here, okay? And so you're probably just going to hit this target up here. So probably going all the way up to the 2, okay? Probably going up to the 2. Maybe it doesn't need to be extended to hit that target. Let's just do it properly here. So I would say this is the neckline right here. This is the SPX, by the way. I do not trade traditional stocks. I'm just doing this because a lot of people do. And, you know, if Bitcoin's bullish because because the DXY is going down, and then so should the traditional markets. So I'm just using the SPX as an indicator, nothing more. Okay, so you can see here, if you take the technical target, the measured move of this W pattern, this bullish W pattern, which was broken, right, to the upside, so you broke resistance and you retested it as support, you should be up here. Your target should be up to this region, okay? And that would be consistent with these resistance levels right here. So you're targeting 4,100 on the SPX. So yeah, people are gonna go short on it because, once again, people are impatient. They don't understand price action, and they think that intra-wave corrections, every intra-wave correction is a consolidation reversal. They think that the trend is over if you're doing an intra-wave correction, right? They don't know, you know, how to read intra-wave corrections. So don't get confused, and I put that in the title. Don't get confused. This is very clearly an intra-wave correction. This is very clearly an impulse. This impulse is very likely going to continue, and I think the likely target is up here at around 4,100 before another intra-wave correction, but a larger intra-wave correction. And then, you know, that takes you to the last big leg, which is a wave 5. And again, I've mentioned this before. Any impulse, bullish impulse, bearish impulse. An impulse is essentially, another way to look at it, is a series of creating bullish patterns or bearish patterns, depending on if it's an impulse to the upside or downside. But here, you see, this is, this is a bullish pattern. It doesn't matter if you're charting Bitcoin, if you're charting a Dent, if you're charting the SPX, this is all the same stuff. Bullish pattern, breakout, retest. You hit the target. Another bullish pattern, right? Breakdown, breakout, retest. And then that hits the next target, right? Until you get to your ultimate target. I think the ultimate target for the SPX is up in the 5,400 region, okay? So that's what I'm seeing on the SPX. Again, guys, the purpose of this channel is not just to, you know, to provide a bunch of information for you guys to trade off of. It's really to share my process so you guys can learn how to do this just like me, if not better. Because it's not I wouldn't say it's hard, but it does take some attention to detail. It does take some doing, some focus, you know, a little bit of practice, and that's it. Okay, let's get into looking at Bitcoin finally. All right, so Bitcoin is doing what we said it was yesterday, okay? What did we say yesterday? We said yesterday we're in a massive wave 4 correction, okay? Just like the DXY is in a massive wave 4 correction to the downside, Bitcoin's in a massive wave 4 correction, but to the upside. Makes sense, right? Again, here you got wave 1, wave 2, wave 3, wave 4. This wave 4 is what you see here. A nice complex correction, okay, WXY. And yesterday I was saying that these complex corrections that you're seeing in Bitcoin and a lot of other assets in the cryptocurrency space, they're what we call running flats. Running flats are particularly bullish. Why are they particularly bullish? It's because the last leg does not come down past or at where the A wave hit. Okay? They come short, they fall short. And the only way they do that is usually by printing what we call ending diagonals. Okay, it's a 3 3 3 3 3, so 5 waves of 3 waves, corrective waves, but that is also an impulsive movement. Okay, so that is an impulsive movement. It's counted 3 3 3 3 3, and you can see that here. I put it in the wedge. Now, some of you will say, okay, Dean, that's what you said yesterday, but what the hell is all of this subsequent price action right here? What's this? Is that also part of the ending diagonal? My answer to you, no. Two things. First, turn on your volume indicator, okay? And the volume indicator tells you exactly what's going on, okay? Your volume indicator shows you that this right here is a type of consolidation reversal pattern, okay? What is a consolidation reversal pattern? That's probably, if I had to have an expertise in trading, that's my expertise. I talk about that more than anything. And I don't know anybody else in the world maybe that looks at these patterns more than me. Maybe there is. I don't know about them. Okay. This is a three-wave move. Okay. Initial breakup structure. It's basically saying whatever this trend is, we're done with it. That's your initial breakup structure. Okay. That's an A wave. Every A wave has a counter wave. Okay. Every corrective wave has a counter corrective. It's a pair. They come in pairs. So if that's A, we need B. Okay? And that's your B wave. It's a three-wave move that countered that A wave. Now, that's the first degree of AB basing. For an AB base to be complete, it needs at least 2 degrees. And so we see that right here, we're forming the second degree. So let's focus in on the second degree of the AB base. Here we go. And you can see, let's actually jump down. Whoops. Let's jump down into the 5-minute chart. And this is, some people are like, oh, you're a degenerate. Why are you trading the 5-minute chart or whatever? Sometimes you need to jump down into a time frame to see more detail, right? It doesn't necessarily mean you're trading that chart. Sometimes you can, but again, everything has its purpose. It's, there's no one best time frame or anything like that. That's garbage. It's just all about what you're doing with it, what your risk management is, all that stuff. Okay. So the end of that B wave was something like here. Okay, maybe it was here. Or I'd say here. Let's see. I'm trying to figure this out. Sorry. I feel like it's here. Okay. Something like this. Okay. So you got 5 waves up in some kind of diagonal structure, but it's still 5 waves up for Bitcoin. Okay, in that second degree AB base, and then 3 waves down respecting the 0618. So essentially what you're forming here is, again, a zigzag, but this all is a second degree AB base. Okay, again, this is A, but it's a different A, so we're going to label it small a, and this is B, it's a different B, so we're going to label it small b. Okay, prove it to yourselves. Take your Fibonacci retracement tool. Measure from the orthodox low of that small a to the top of small a, and you can see exactly what I said. This subsequent 1, 2, 3 wave move respected the phi ratio, or 0.618, of that move. This is your second degree AB base, okay? And now that you've printed 2 degrees of AB basing, you can expect with a high degree of probability that the price continue its upside, okay? So let's jump back into the 15-minute time frame. So again, just to quickly recap, you've put in this complex wave 4 correction, okay? It's a running flat WXY, okay? And again, wave 4 typically has complex corrections, especially when wave 2 is relatively simple. That's the law of alternation, okay? So you got a relatively simple wave 2 here, flat correction. You got a relatively sharp wave 4 that's more complex, okay? It's just relative complexity is increased. We do not need the volume indicator. I'm going to turn that off. And then you got, once you finished it, anytime you finish any corrective pattern, the last wave is going to be impulsive. Anytime you finish any corrective pattern, the last wave is going to be impulsive. Doesn't matter if it's ABC, WXY, WXY, XZ. The C wave is going to be impulsive. The Y wave is going to be impulsive. The Z wave is going to be impulsive. Given that you just finished an impulse, are you just going to turn around and go? No, that's not how it works. A lot of people don't even believe in the existence of consolidation reversal patterns. That's why I say I'm probably the world's leading expert, because most people think they don't even exist in Elliott wave theory, okay? Ralph Nelson Elliott himself acknowledged and asserted and spoke to their existence, and you know, he just did it, you know, cursorily in his Secret of the Universe, his manual, his memoir. But a lot of people, professionals, great traders, I don't know how they get by. I don't know how they read price action without including the possibility of these consolidation reversal patterns, because after price finishes its trends, it needs to do that and always does do that. So that was a trend down, 2 degrees of consolidation reversal. And now and only now, after this, can you break and go up and resume your impulse to the upside, okay? So this is what I think is happening with Bitcoin, and this is what I think a lot of people are going to get confused by, because a lot of people think it's over. Again, just like I said previously, just a few moments ago, most people can't read this, most people can't read that. People can kind of read this and kind of read that. They can kind of read impulse. They know when it's going up fast and they know it's going down fast. But then the in-betweens, intra-wave corrections, they're like, I don't know about that. And if it's taking a little longer than they think it should take, which wave 4 always takes longer than you think it should take. You know, people are impatient. It's fine. We've been in a bear market. We can understand that. They think it's going to break down from here. And this is a reversal pattern, not an intra-wave pattern that continues this trend. This is why a lot of people are going to be confused. This is why a lot of people are going to lose money on this trade, because the more foolish, so the less foolish people don't do anything. They just stand on their, sit on their hands. Some people may be getting into trades here and actually going long. But then other people are saying, like, there's somebody on Twitter, Miss Alpha or something like that. Miss Wifey Alpha or something. I don't know. Lots of followers, big account, saying, I'm going to short this market. Obviously providing no evidence of having done so, but just talking, Twitter influencers in the crypto market. They probably don't even trade. And so they're trying to short this. Lots of people are going to lose a lot of money, because this next wave is going to be the biggest waves. Just like what we saw in the DXY, the wave 5 is going to be extended, most likely, okay? and it's going to probably go down faster and harder than anything in waves 1 through 3. Wave 5 in Bitcoin is going to go up more than waves 1 through 3 and faster and higher than, anything that you've seen in this trend up until now. The second thing, just like we did with the DXY, I'm going to go on the 4-hourly time frame. Look at the pattern analysis. Guys, look at the pattern analysis. Again, this is the beauty of good analysis. Doesn't matter what you use. The beginning of, and understand also why, the why is beautiful. Why is it that Bitcoin printed what is likely a leading diagonal? What's the reason for this? Well, the simple reason using technical analysis is that look at all of this activity. Do you expect price, even though it's impulsive, to just fly through here? No. There's too much activity over here, too many buys and sells, too much noise for price to really fly through. So price really struggled in forming these waves 1 through 4. And now, and only now, that it's retested this channel, it can fly. Because guess what? There are fewer orders over here in this region than there were over here. So again, when you want to ask why, if price goes from here, right, and it starts flying, people can say, oh, I know exactly why. It was Powell that said inflation was going to do this or that, or it was the midterm elections. Like, the beauty of technical analysis is that you can just look at the chart and answer why in a simple, non-pretentious way, because I think it's super pretentious to think that you know why the market's moving because somebody sets on the, like, that's not necessarily the case always, right? Especially for really large markets. Anyway, yeah, so that's Bitcoin. That's the next likely move, and most people are not reading that correctly, okay? Not everybody, but most people that I've seen on social media are misreading it, and they're seeing that the market is likely to crash, which makes no sense, because if you just look at your simple momentum indicators, the 4-hourly momentum indicator is completely oversold, okay? And that's a favorite of many. Let's see, you've got your hourly oversold. Dailies reset and dip down. You got your weekly cross bullish, although it's in overbought territory, but it's cross bullish and it's open. And your monthly is completely, absolutely, and utterly oversold. So the larger move is obviously to the upside, okay? So that's my best take on Bitcoin and what's going on and why. Guys, if you're getting value, please like, share, and subscribe. As I've said before, I do my best work live. It's like I'm channeling or something, because I see certain things when I'm live with you all that I don't see by myself. And as a result of you all looking for certain things, or my thinking that you're looking for certain things, I don't know, it just comes out. All right, let's move forward. Cardano. Same thing. Just like I said yesterday, you got this leading diagonal, you've got this running flat correction, okay? Running flat correction, once again, super bullish. And then after it's finished, you don't just go up. No, you have to put in what is called an AB base. Consolidation reversal pattern. And when I say some of the best, I don't know how great Bob Prechter and AJ Frost were in trading. I don't know. Maybe they weren't so great. They did a great job amassing or combining all of the information that we've compiled about Bitcoin, all the information that we've compiled about Elliott wave theory for the past 100+ years. They did a great job doing that. So I don't know if they were great traders. Okay, so I'm not going to speak to that. But when I say that they literally don't believe in A/B basing, I'm not exaggerating. Okay, I'm not exaggerating. May shock you. Right here. So also in Nature's Law, which also is subtitled The Secret of the Universe. I usually call it The Secret of the Universe because for some reason I can't remember Nature's Law. Also in Nature's Law, Elliott twice referred to a structure he called an A-B base, in which, after a decline ends on a satisfactory count, the market advances in 3 waves and then declines in 3 waves prior to the commencement of the true 5-wave bull market. The fact is that Elliott invented this pattern during a period in which he was trying to force his principle into the 13-year triangle concept, which no interpreter today accepts as valid under the rules of the wave principle. Indeed, it is clear that such a pattern, if it existed, would have the effect of invalidating the wave principle. Okay, so we don't have to keep going, but as brilliant as Prechter and Frost are, and as much as I use this text, I always say nothing's 100%. Very few things are 100%. This is not 100%. I don't just blindly accept everything that I read, because I've done enough charting, enough analysis, enough trading to know for a fact that A/B basing exists, and my bank account is proof. So, I honestly don't know how people like Prechter and Frost trade without understanding A/B basing. How can they trade on smaller time frames or even larger time frames successfully, consistently? And so yeah, I always talk about this, and that just flabbergasted me when I saw that. I was like, wow, they're like, yeah, Ralph Nelson Elliott came up with Elliott wave theory, and we think it's amazing, and we've been using it all this time. But yeah, he was just full of shit when he was saying that. That is dangerous, and I think that's hubris, and I think that's a bit of that's sometimes people think they're more clever than they are. It should be examined carefully, and here it's just he doesn't say it correctly, because he says, what do you say? He says, after a satisfactory count, the market advances in 3 waves and then declines in 3 waves. Yeah, that's correct, because that's either way. Advance and decline, doesn't matter if it's up or down. But yeah, so I go a little further than that, because Ralph Nelson Elliott didn't necessarily identify 2 degrees of A/B basing, and in my work, I always say you need a minimum of those 2 degrees. Anyway, let's keep going. Here you see simply are running flat followed by 2 degrees of A/B basing. Let's just look at 2 degrees of A/B basing, which is creating here, as you can see, a bullish what's it called? What is this called? Bullish divergence. Wow. Okay. A bullish divergence. So you can see the A/B basing, once it starts, you see the bullish divergence on the hourly time frame. Very, very clear. Very easy to read, right? Once you can see it, it's hard to unsee it. I think if I sat down with Prechter and Frost, if they're still alive, I don't really know, and they were being sort of true and honest with themselves, I could explain it to them. They'd be like, oh shit, yeah, that's right. And I think, other places in the work, I appreciate the fact that they say, oh, we didn't know this existed, and after like 10 years of looking at this, we conclude that we're not exactly sure what's going on here or there. So that's why I still use that book, and I think that's why it's a good book, because for them to have gotten as far as they did, they need to be, a decent bit humble to really make some forays into their research. In any case, here you can see the A/B basing starts, I would say, over here, right? And then this is the first degree, and this is the second degree right there. So here you already started with your impulse to the upside, or maybe that's your pivot, right? But you've essentially started because you have 2 degrees of AB basing. Okay, so that is Cardano. Polkadot, I think this is in another, let's go on the hourly time frame. No, not 4 minutes. Jeez. Okay, what the hell's okay, there we go. Don't know what happened there. Okay, so you see again, this is clearly a wave 4 situation. 1, 2, 3, 4. So you've started wave 5, okay? You've started wave 5. That's what you've started in Polkadot. I think it's quite clear, yeah? Because you can see 1, 2, 3, 4, and then you started wave 5, and you're just going to continue to go up quite substantially because the pattern analysis shows you that you're at resistance and you're breaking resistance, and you've retested resistance as support. So you're going up at least this much to the upside, hitting this. Simple. Sometimes the simplest analysis is the best analysis, most accurate analysis. You know, we use Elliott wave theory, obviously, and it gives us a lot of insight on a high time frame, small time frame. But basic support and resistance, if you're new, if you know basic support and resistance, you can do wonders. You can do wonders. Yeah, ETH also in a wave 4 situation, right? This is clearly wave 1, 2, 3. Again, a running flat wave 4 correction. Do you see that? Instead of a flat correction that looks like this, it's slanted because it's very bullish, very bullish. And so you have your jumping down on the hourly time frame. You have that consolidation reversal pattern that starts right here, and you can see it. And you can see once again a little bit of bullish divergence, not too much like Cardano, but a little bit of bullish divergence right here, okay, on the hourly time frame. And if we jump down to the 15-minute time frame, we can even count it, right? And the more you do this, the more like second nature it gets. It's just, you can see it and it's hard to unsee, and then every time you see it, it's like, okay, I get it. You know, this is the first degree and this is the second degree. Kind of like in Bitcoin. Whoops. You got 5 waves up, 3 waves down, right? That's the end of 2 degrees of AB basing. Now, expect that trend that you were in before. Expect that trend to continue. Boom. Do you see that? And then again, let's tie it all up with some simple support and resistance. What support and resistance say? Okay, looks like you're at some sort of resistance that you retested as support. Expect to go and play that W pattern out to the upside. Yeah. So just keep it nice and simple and accurate. Okay, reserve rights. Looks like this was a massive, whoa. This was a massive A wave. This was a massive B wave. And again, 1 degree of AB basing, 2 degrees of AB basing. That's all there is. So this is, again, high time frame AB basing. For you to say that doesn't exist, then what do you make of all of this up and down stuff? You know what I mean? Like, either you're in 5 waves up or you're in 3 waves down, okay? You can't explain that either as a 5-wave up sequence, and I think this is why a lot of Elliottations fall into the trap of thinking everything's an impulse, because they don't read AB basing, which is corrective, but it's not necessarily intra-wave corrective. Yeah? There has to be, and it makes sense that AB base exists, right? Because think about it. You're either impulsive, or you're preparing to be impulsive, intra-wave, or you finish the wave. And once you finish the wave, there needs to be some other mode, some other state of price action that you exist in. That's the AB base. That is the intermediate preparatory state of price action before going into impulse. And then once you're in impulse, it's, you know, it's all gravy. It's intra-wave correction. So this is preparing to go in impulse, okay? And that also is why I have different ways of trading, okay? The way I trade when we're in AB base mode, okay? Basically in consolidation reversal mode, I basically accumulate. I just accumulate longs or I accumulate shorts. I don't trade on short time frames. I just accumulate. People who can't read it, they're trading on short time frames, you know? And then when I'm in intra-wave, I'm pretty much just waiting or adding, okay? And then once we get and finish the wave, I do the same thing but opposite, okay? So anyway, that was RSR. Currently, you can see it is in, I think it hit a zigzag. Okay, it's hitting a zigzag. But it hasn't yet moved. Synthetics. Yeah, we already said this before. 5 waves up, 3 waves down. Another 5 waves up. Another 3 waves down. Maybe this second 5 waves up, 3 waves down is an impulse. We can just see real quick. Doesn't matter that much, but I don't know, just want to check. Yeah, I would say this is wave 1, wave 2. Okay, and how did I quote unquote confirm that? If there's a confirmation, I'm just looking at the time it took for these 5 waves up and these 3 waves down, and they both took about 4 days. So I'm relatively confident that the AB basing, all the AB basing happened over here, over here, over here, and then over here. And then once we started this, we're an impulse. Okay, so this is my wave 1, wave 2, wave 3 is coming. And wave 3 is likely going to be, very simply, the target of this inverse head and shoulders. That is how you use both Elliott wave and simple support and resistance pattern analysis. Pattern analysis can be beautiful, but it's a crutch when you have no context. You know, when you're just looking for patterns and I have no idea. I think combining pattern analysis with another mode, with another tool, can be very, very valuable, because, you know, it gives you context and you can know when to look for the patterns. But if you're always just looking for patterns, sometimes it's hard. It's very, very challenging to make sense of anything. VRA, still not in impulse. Okay, so all this is corrective, right? It's just corrective, corrective, corrective. I think this is all corrective, and you're basically in small b. You're in small b territory, and maybe you put in the first impulse right here, okay? But in any case, you haven't seen anything. From a lot of these smaller cap alts, they haven't even entered impulsive price action yet, okay? And when they do, Bitcoin dominance is going to drop substantially. I would say same thing for Zilliqa. You can see that, right? That's clearly a 3-wave move up. That's clearly a 3-wave move down. Clearly a 5-wave move up and a 3-wave move down. So that is kind of like a zigzag. I think the impulse is coming. Okay. Same thing with Ravane. I mean, you don't even have to ask. And, just the pattern analysis. You retested that. Boom. That's simple, right? Keep it simple. Kadena, same thing. This is clear 3 waves. This is clear 3 waves down. Here, I think you put in some sort of 5-wave move up and then 3 waves down, kind of like a zigzag. Expect 5 waves up to start the impulse. You haven't started the impulse yet. Litecoin. Here is an A wave. That's your counter B wave. What do I want to say? A pivot, thank you. A 5-wave move up, a 3-wave move down. Your impulse starts. Your pattern analysis tells you that this W pattern has just been retested and will break out to the upside. Okay? So, I mean, like, it's very clear if you're looking at the altcoins, you gotta be crazy not to go long. Okay? And as I say that, I actually want to make an exception because, the market rhymes and there's a lot of things that are going in the right direction or the similar direction, but not everything's exactly the same. Okay? And this is a great example of things that are not exactly the same. We all know Dogecoin broke out and made a lot of upwards price action or upwards momentum, and now is in some sort of correction, but this can actually be what people think Bitcoin's in, a consolidation reversal. Okay? And why do I think that this is a consolidation reversal? Doesn't have to be. Maybe we can move up a little more, but I don't think so, and I'll tell you why. Let's just... one sec. Okay. I'll tell you why. Actually, let's go on the daily. And quite simply, when you break out from a pattern, you typically make the length or the height of that pattern as the technical target. Okay? I think Dogecoin's hit its technical target. The daily momentum indicator is telling you that it's completely overbought. Now, in a bull market, you'll be overbought and you can stay overbought for quite some time. So that's not the be all and all. But what I think is really telling is that you made this target, which is the height. You pretty much hit the height of your channel, which is the target of a channel breakout. Channels break out, any pattern breaks out and makes the height of its pattern. Meaning, if you want to look at this as a W pattern and this is the resistance, this is the height, or you take this height, whatever. You superimpose it from the side of breakout, and that's what you get right here. Okay? So given that we've hit that target, I would not touch this until we retrace and boom, do something like that. Because this, remember, is a really important resistance. And that was important for many, many months. So there's very little reason to believe that we just break this and then just keep going. It doesn't work like that, right? This is one of the principles in technical analysis. You break important resistance, you retest it as support, and then you continue, okay? So in the case of Dogecoin, if I wanted to add to my position, okay, or if somebody wanted to get involved in this trade, the smartest thing to do would be to wait until it tags this resistance, this previous resistance as support before continuing. Okay, and so you load up over here, or you open your position over there. Okay, so that is my view on Dogecoin. Dodo, right now, let's jump into a 4-hourly time frame. Okay, same thing, 2 degrees of AB basing, 3 waves up, 3 waves down, 1, 2, 3, 4, 5 waves up, 3 waves down. So that's your zigzag. Expect 5 more waves up. Okay, so that's your 2 degrees of AB basing. You have not yet gone impulsive in Dodo's small market cap altcoin, right? So not a big surprise. Algorand, leading diagonal. That's already starting its wave 5, or it's already started its wave 5 rather. Yeah, I think it's already started its wave 5, and so it's basically continuing to go up, and it's likely to hit somewhere around here before retracing. Okay, so that's Algorand. And Telcoin starting to go. Telcoin starting to go. And as you can see, these small cap alts, they're going to start moving very, very soon. 2 degrees of AB basing, as you can see here. A, B, boom. That was it. That was the 535, right, that you were expecting. So this was the second degree of AB basing, was a zigzag. Although Telcoins moved and gone up, I think right here we hit resistance. Okay, it can continue to go up though all the way here, but this is also some kind of resistance that it may consolidate at for a bit before continuing up. Okay, wouldn't be surprised if that were the case. Let's see, hourly time frame. Let's see. So I see my impulse starts over here. My impulse starts over here and goes like this. Okay, so basically I see 5 waves. Okay, so I personally would want to see some sort of retracement in Telcoin before continuation, or before, if I were to get in a trade. But again, this is the bottom of the market. If you're taking a spot trade, throw caution to the wind. Who cares? This is the bottom of the market. But if you want to be like really precise, I would say it's likely that you experience a retracement down here before continuation. Okay, and that is likely to take as long as it took to get up there, which is taking the time, 2 days and 20 hours, so almost 3 days. I would say 3 days. 1, 2, 3, something like that. Okay, and I'm actually gonna look to enter that trade soon. Or I'm actually looking to enter that trade again, because I entered it and I left it because I needed some extra margin in one of my leverage positions, XRP. But I'm going to use that extra margin once XRP gets to certain levels, and I'm going to put that back into Telcoin. All right, that's kind of like balancing your trades, or I don't know, doing trade account ninjutsu without adding extra money, just using your current trade money. Okay, XRP. I love this nice double bottom, okay, with strong bullish divergence right here. Do you see that? So lower low even. Lower low, price action. Higher low, confirmed on the momentum. That is beautiful. That is absolutely gorgeous. You know, this is a little bit of a challenging read, but like I said the other day, I think what you're getting here is a 5-3-5-3-5 leading diagonal, and then this is let's see. Yeah, something like that. And then this is your wave 2 correction, which takes you down to the 0.618 of the previous impulse. And so if you take your Fibonacci retracement tool, you can see that's likely the case. You came down to this region. Okay, so that's like the larger move, and you can see there's evidence of a zigzag here, okay, an ABC correction down here, and then once you got down here, specifically at this point, let's see, right here, you started putting in AB basing. So you could say actually that this was the initial Birkev structure, this was the big B or the counter, and then the second AB base is down here. Or you're still in small a and then small b is going to do this or even that. Who knows? But yeah, you can definitely see some AB basing there. Okay? And then dent finally. Okay, so for dent, what we're gonna do is we're gonna zoom out a bit because this was requested on a large time frame, so, and we don't have any other requests, so we can take our time here. Okay, all right, so that's a little thing that TradingView added right here, this dinosaur showing you the beginning of, or the end, or the beginning of the price history. So basically there's nowhere else you can go with this. And this chart is actually really easy to read on a high time frame. Quite easy to read. Okay, for us Elliottians, this is a very unambiguous 5-wave sequence. Okay, this is clearly wave 1, this is clearly wave 2, this is clearly wave 3, this is clearly wave 4. Okay, and this is clearly wave 5. Now what we're going to do is going to confirm that, even though we're confident. We're going to take our trend-based Fibonacci extension tool from the top of what we think wave 1 is, and retracement of wave 2, and wave 3 ends exactly where we think it should, between the 1.618 and the 2 Fibonacci extension right here. Okay, and then we had our wave 4, and then wave 5 takes us all the way up here. Okay, so this is really straightforward. It's like textbook, you know, this is as close to textbook, you know, advanced as you get, right? Maybe even when I started reading price action, maybe I would have trouble seeing this and recognizing 5 waves. Okay, so I don't want to oversimplify things, but right now obviously it's clear to me and I can measure it and all that stuff. Anyway, 1 2 3 4 5 waves up, 1 2 3 waves down. Okay, that's as simple as it gets. And again, if that's 5 waves up, 3 waves down, you pull out your Fibonacci retracement tool, and again, this is from March 2020. Obviously the price action starts from the 2019, but this is pretty much all we need to know. 5 waves up, 3 waves down. Again, wave 2 always typically comes between the 382 and the 618. Okay, actually has to come between 382 and 618. So you get 1, 2, 3, right exactly where we think it should hit. Okay, and remember we talked about 3 different phases of the market: impulsive phase, corrective phase. So this is your impulsive phase right here. This is your corrective phase right here, and this is your intermediate or in between or Bardo or whatever the hell you want to call it. I call that AB basing, corrective consolidative phase. And most people don't even think this phase exists. Yeah, and that's how I made most of my money, and that's how I really. This is my edge now, and I'm putting it out there. I'm not hiding anything. But yeah, most people don't think it exists. It's awesome. It makes things so much more simple to read. Okay, this is not part of this ABC correction because this ABC correction is finished, right? This complex correction here, or is it? No, this is a zigzag, right? 5 waves up, 3 waves down, 5 waves. 5 waves down, 3 waves up, 5 waves down. Okay. And actually, this is the WXY. The Y, this would be a WXY, by the way. This Y is a zigzag in it of itself. Okay. So all you need to do, very simply, like we've done for the rest of the market, is count these. What is it? 160 days of consolidation reversal. And you can even see confirmed bullish divergence right here. See that? So your momentum indicator is showing you that although this is flat and you've been consolidating, price wants to rocket up, and it's probably going to. Okay, so we can jump down a time frame. Let's go to the daily, and let's have a look at that. I think it's 160 days. Most altcoins, it's been 160 days. Let's count this, or let's measure it. 172 days. Okay. Anyway, so that's your sideways price action. And there's a functional reason for this, okay? Why can't price just finish the correction, 3-wave correction between the 382 and 618 and then go up again? It's because people just lost a lot of money here. And the market's not ready yet. Okay? People are not confident because you just came out of a strong move to the downside. There are not that many people who are still confident in the price reversing. So before you reverse, just like anything in nature, it goes gradually. So this is the gradual preparation for trend reversal from up to down, back to up. That's all this is. Okay? And in this, just like we've been doing on this channel, you can read 2 degrees of AB basing. That's your initial breakup structure, wave A, targeting wave 4 of the previous trend. That's your subsequent B wave, okay? So that's big A, big B. And here you go, another A wave, okay? And then another B wave. Okay, and that B wave ended here, and then this seems to be a pivot of sorts, and then a move up. Okay, this pivot, I think you have another 2 degrees of AB basing on a smaller time frame over here, but this is your large time frame AB basing, 2 degrees of AB basing complete. Okay, so you just focus in on that right here. So you drop down another time frame, and you can read, most likely you can read 2 degrees of AB basing in there. Okay, so here you go, wave 4 of the previous trend. All right, that's your big A targeting wave 4 of the previous trend, big B, and then again you have 5 waves up, 3 waves down, Okay, so that's exactly what you got. 2 degrees of AB basing on a smaller time frame, a flat correction, a zigzag correction. You're literally at the bottom, about to put in a massive. You're about to put in a massive impulse, and you're almost just about to cross bullish on the momentum indicator on the 4-hourly time frame. Let's see, on the hourly time frame, you're close. But yeah, this looks great. Looks great. Yeah, I hope that was helpful. Hope that was useful. Guys, like, share, subscribe if you got value. And that's pretty much it. I mean, we went pretty long today, but it's okay. All right. Take care. See you guys tomorrow. Bye.